हाँ 200 निकाल.
Seniors in the profession, office bearers of the society, and ladies and gentlemen, the fellow members. It's a very proud privilege to welcome you all to this evening on the subject more applicable to auditor on the Companies Act 2013. Before we start, may I request you all to welcome our Honorable Speaker Nataraj with a very large applause. I believe that in the assurance practice, one has to be more update with the so many pronouncements, so many things happening around the world, within the country and otherwise. So whenever something very special things, you need to look at it with the amendment. You have to, at times, you are attracted to see certain financial statement, whether it is the quarterly review or the yearly account. And some of those early birds had been signed by our learned speaker of the evening. I always think of him and I see the results of the Infosys or Wipro, the early birds when those results are announced. And we are able to get a lot of glimpses, more particularly in relation to the audited statement of accounts or the international standards, etc. And we really feel proud at that time for the presentations made by him. In fact, as I know him very closely, I am consciously aware he is one of them who very strongly believes in practice versus what he does it. He is the one who always conveys, every time when he meets me, he tells me that you have to ensure in your practice that there is no conflict of interest and there is total independence in the organization that you are running around. It has been one of the major drive on his part when he is representing one of the preferred firm of what is called as one of the big four. So in that process, I had been always appreciating in practice since 33 years. And he had been traveling across the world and spread the messages on the subject of the audit and within the country at number of times. He is currently the Chief Operating Officer of the preferred firm of the KPMG Group. He has been head and learning education at various levels. Some of the members may be aware that he had been one of the prime speakers in some of the valedictory address in our long-term structured course, which were otherwise by and large chaired by Narayan Bhai Verma. And we were always fortunate to have him whenever we needed him. The subject of Companies Act 2013 was always in demand by the members of the profession. And particularly when many of the things started being applicable from 1st April 2014, the society thought of keeping this lecture meeting. When I think of this Companies Act 2013, many things happening around to small business organizations also who are running the corporate structure where certain things are being asked immediately to be attended. I am not aware whether all corporates have attended, but there are certain things to be attended immediately. In that process, there are many things related to the auditors as applicable to auditors, and hence we have thought to keep this subject restricted to the auditor. We had earlier a very detailed discussion on the same subject when the Act was introduced and approved, and we are fortunate to have our learned speaker of this and Mr. P. Ramesh also, who is present over here today to this gathering. So in that spirit, when we are thinking only on the subject of the auditor, I also think of section 139 when the auditor's appointment has to be done. the new rule 4 has been introduced now related to that section where the auditors have to give a certificate which is running into 4 statement. Same way, there are issues arising out qua partner number of audits or qua organizations. I distinctly remember a letter circulated by a Central Council member conveying the Central Council decision in respect of tax audit, which was rediscussed last year, where he said the number of audits to be done with reference to the total organization. Who signs it is not important, but it has to be multiplied with the number of partners. There are some clutches arising out of this. The issues are related to the internal auditor's appointment. Table F to be approved, number of resolutions to be approved, the issues which could be applicable to the auditor related to corporate governance. In lighter way, I would say what the auditors would do when there is no independent woman director in the given case, and what the auditors will have to take the steps. Number of issues are there, but Nataraj, knowing him closely, he is very positive on the subject, and he believes that these are teething problems and we have to resolve them. And for those teething problems to be resolved, he is here with us all the way from Bangalore to address us. So, sir, welcome you once again. And as a part of our respect and honor to your, may I request our Honorary Secretary Chetan to present a memento to your good self. May I request you to address the gathering.
Good evening, everybody. Good evening, everybody. Good. Respected Kanubai, respected members of the days, respected members of the profession, I believe that this is genuinely a matter of privilege and honor to address a distinguished gathering such as this. What I intend doing is something materially different, and that is share with you some of the what do you call it, real life situations that I am encountering with regard to these new provisions, and highlight what sort of pitfalls exist, how is this impacting boards, especially audit committee members, independent directors, and how are they reacting to it? That is one aspect. The second and the more fundamental aspect is, as professional members, as consultants, we always have this habit of saying, oh, this act is too complex. Things are going to become even worse, and so on. We demonstrate and share with people whom we meet a very high degree of pessimism. So much so that people really get worried. I'll give a real example that I encountered the previous week. I was at an audit committee. Kanubai, this was in Hyderabad, and I mentioned to you that I'm coming from Hyderabad, and I met with the audit committee members. That was a pre-audit committee meeting. It was not an audit committee, but I did meet with the audit committee members, and they said, we need to have a chat with you. I said, yes, please go ahead. On the one hand, we are happy that you guys are doing a robust audit. We are also extremely happy and comfortable about the fact that there is a very good competent firm that is handling our internal audit. I said, yes. So where is your discomfort? They said, look, our discomfort is on account of two reasons. Reason number one, you are the only guys whom we see in this audit committee. I said, what do you want me to do, get my entire staff? They said, no, it's not like this. We see only one firm come and talk to us, whereas There are several large offices that we have across the world. We have an office in Europe, we have an office in the US, we have a large establishment in Africa, and so on. We don't see any of those partners here. And those offices constitute 85% of the total operations of this company. So you guys actually represent 15%. And the only comfort that we get is from you guys. I said, what do you think that needs to happen? And they asked a very, very fundamental question that are the bearing on this discussion that we are going to have. They said, God forbid, Nataraj, let us assume something goes fundamentally wrong in Europe. Somebody commits a massive fraud. We are signing off on the consolidated financial statements here in India. What happens? Somebody says, look, why was this matter not referred to? What happens in a case where there is a significant internal controls failure in one of these offices in some other place? What happens? And there was a very recent example where one of the offices had recorded sales running into millions of dollars that had to be reversed that day because that sale transaction was not backed by dispatch of goods. They said, this is one transaction that we got to know about in the course of our work. We got to know about it. But suppose if something escapes our attention, who takes responsibility for it? Who takes responsibility from your end with regard to each one of these offices? Now, it is very easy to say, no, you guys don't understand how audit happens. You see, all these offices are audited by independent firms of chartered accountants. They are extremely competent guys. And what we do is to consolidate that, and then that's how we prepare these financial statements. But from an independent director's perspective, they are genuinely worried. What happens in all this if something goes wrong? And that is the concern that we need to address as professional members. Point number one. So what I am trying to tell you is that there is a whole new set of expectations that are getting built up in the stakeholder community. Who are those people? Management, audit committee members, the board of directors, bankers, you name them, they are worried. So this is one aspect that we need to deal with. What is the second fundamental aspect that we need to deal with as professional members? And that aspect actually is much more complex than the aspect that I just discussed now. And that is, are we as professional members geared up, ready? Are we, forget getting ready, are we sure we understand what the new expectations are under the Companies Act as far as we professionals are concerned? I will give you an example, and actually I thought I will reserve this for a later part of the discussion, but I know for a fact that BCAS boasts of some of the best tax experts and so on, and I will ask you, Kanwal, I will raise this issue right away. And this is not a hypothetical situation. I assure you, my dear friends, I am a good storyteller, but here this is not a story. This is real life. There has been a very recent instance where the tax authorities in Germany sent a notice asking the auditor of the company to appear before them for a very, very serious inquiry. And mind you, the auditor received that notice at his residence. There was one more person who received a similar notice at his residence, the CFO of the company. And the issue was something like this. 2 years ago, the company had made huge profits, and what the CFO did was, he said, it is possible to build a case, legitimately of course, that several of the assets need to be impaired. And he went ahead with that impairment entry. That had the significant impact on financial statements because their taxable income almost vanished on account of this impairment. Just 2 years later, that is, he had skipped one accounting year, and in the second accounting year, that is this year, he reversed that entry, knowing fully well that he will need those profits. The tax authorities swooned on the accounting firm, got hold of the partner, got hold of the CFO and said, you guys are charged for perpetrating tax frauds. Today we have a piece of legislation that precisely deals with that. So, when you say that there are people, there are stakeholders who can file a case against you, who can initiate proceedings against you for fraud, for professional misconduct, that includes tax authorities. So hypothetically, just imagine you are party to, say if I can give you a real life example, and I don't want to name the company because it's a very big company, a reputed company. What that company did was, they transferred assets from the holding company to one of its subsidiary companies at a significant write down. They wrote down those assets and transferred those assets from the holding company to the subsidiary company. Does it make a difference to them that they transferred it at a very, very low price? It doesn't make any difference to them. What's the reason? It's a wholly owned subsidiary. But there is a reason why they did it. They wanted to save on book profits. Although this could be legitimate in some ways, and the auditors of that company had signed off, if the tax authorities believe that this does not fall within the realm of proper accounting, I assure you, you will have a notice on hand. So, what we are witnessing today is something materially different from what we have been witnessing until now. There are several such instances that I can quote, but what I will do is, I will deal with the third and the most fundamental issue, and that is the preparedness of the profession, because whatever I am going to discuss again has a significant bearing on the preparedness of the profession to deal with change of auditors and so on. There are easily, I would say 1 million companies that would come up for rotation. 1 million? Agreed? 1 million companies would come up for rotation. So in terms of opportunity, what sort of opportunity does it offer to one practicing chartered accountant? How many individual practicing chartered accountants would stand benefited? 50,000. 1 million divided by 20 would be 50,000. So if we were to equally distribute the opportunity, 50,000 professional chartered accountants would stand to benefit. Equal distribution of wealth. Now, this is the opportunity side. What is the threat side? What is the risk? Do you know what the risk is? You will not get that opportunity. The risk is that that company is not going to consider you for audit. The risk is that that company would say, hey, stop. There is no opportunity as far as you guys are concerned. Do you know why? You do not possess the competencies and the skills and the knowledge to handle an account of this complexity, this industry, and so on. Say, for example, there is a telecom company that says, let's get rid of all these large accounting firms that have been doing our audit for all these donkey's years. Let's look at a small firm. And they say, let's invite people. What sort of a chance do you stand when you appear before the audit committee? Today, the audit committee is vested with those powers to decide whether you should be given an audit or not. What chance do you have in terms of saying, I deserve to get this audit? Do you know why? I have the skills and competencies to deliver top quality audit on this particular engagement. The question that they will ask you, this is not speculation, this is contained in the rules. What sort of skills and competencies do you possess for us to say, fine, we give you this job? What sort of partners do you have who will handle this engagement? What sort of bandwidth do they possess? Suppose if you say that, I'm bursting at my seams, I have a very lucrative practice. You know what, I work 20 hours a day. Now that doesn't sound impressive as far as the audit committee is concerned, because they will ask only one question. If you already are working for 20 hours a day, how the hell are you going to find the bandwidth, the time to do justice to this engagement? So the next set of issues that I would like to discuss about with regard to the changes that are taking place is whether the profession, whether individual members of the profession genuinely are getting geared, are gearing themselves up to meet with this and capitalize on this large opportunity. In addition to the fact that you need to possess significant sector, business, experience, knowledge, and credentials, in addition to that, these large companies that are up for grabs, there's going to be a significant shift that is going to happen. These large companies that are up for grabs are going to ask only one question. Do you possess information technology related skills? Do your people have sufficient expertise to come and verify our records? They are in a completely paperless state. We talk about audit trail, they'll say, what trail are you talking about, my dear friend? There's no trail. So you have a significant challenge that faces you. The second question that they will ask you is with regard to what sort of expertise do you possess to detect frauds? Why? Frauds happens to be one of the most important aspects that face the company today. There are specific provisions that deal with frauds perpetrated by third parties on the company. It's very important for you to understand this. I'm using words, you need to understand this. I'm not talking about frauds perpetrated by the company. I'm talking about frauds perpetrated by third parties, employees, officers on the company. So there are specific provisions that we will deal with where you will be obliged to evaluate what is the nature of the fraud that has happened. First of all, is it a fraud? Or is it just somebody doing something wrong, unintentionally? It's an error, unfortunate. Or is it something in the nature of a fraud? Does it at all make a difference whether intention is important? Is it critical? Or it makes no difference whether you do it intentionally or otherwise, it is a fraud. So there are these fundamental questions that are going to be asked of you when you make a presentation to an audit committee, make a case for you to be given that work. Therefore, On the one hand, I see significant opportunity, significant churn, because in India it never happened, except in the case of government companies, banks, and insurance companies. There was no churn happening as far as the private sector was concerned. Where was the churn? There was no churn. Companies have been associated, auditors have been associated with companies for some donkey's years, for some 100 years. So you have a situation where the legislation today is saying, hey guys, come on, get things out of your pocket, out, change. Now, that change is becoming extremely traumatic. All of a sudden we find, my God, these laws, these provisions appear to be too draconian, too difficult. Something goes wrong, how can they say that we will initiate action against you and we'll charge you with fraud and so on. One of the reasons why that has happened is India has finally woken up. If I shared with you some of the horror stories with regard to the Security Exchange Commission, which is the equivalent of the SEBI in the United States of America, you will be extremely thankful to your stars that you live in India and deal with Indian companies. So, with these three large basket of issues as the perspective, the broader perspective as to what is it that we need to bear in mind, what is it that is happening that is going to impact me. The last being the most important one, as many of you here, I'm sure, would be running proprietary, sort of organizations, or a two-member partnership firm and so on. The time has genuinely come, my dear friends, to look at a change in the organization structure. The skills, the competencies that you will need to have, the magnanimity, the trust that you will need to build with your partners to make it a much larger firm, that time has arrived. If you are going to say, sorry, this pie belongs to me, I'm not going to, I took 50 years to build this practice, I'm not going to fritter it away by getting in all these new, characters. I don't know them. Nobody is going to come to you, my dear friend. This is also a problem. There are firms, medium-sized firms, that face the prospect of extinction. Why? They have had large audits that they have been doing for donkey's years. And all of a sudden, in a matter of 3 years, woof, the whole thing is gone. Portfolio is gone, vanished. There are firms that are faced with that prospect. What are they going to do all of a sudden? Now, it is extremely difficult for them to say, okay, fine, we'll do one thing, we'll shift to another firm and carry on, business as usual in another firm. That is not possible. There are specific laws that we are going to talk about, which means that you have got to just leave and walk off. It is like a guy who is facing death. And he says, hey, what about all this property? All this belongs to me. I'm the legal owner. And Lord Yama says, my dear friend, it's time up. Pack up. This is what this legislation is all about. They are telling you, it's time up. Pack up. And once we understand the import, the significance of all these changes, instead of complaining and instead of saying, this is now becoming extremely risky, you will say, what do I need to do to meet these expectations and not just survive, but excel under these circumstances? And that is the message that I have for this audience. These are extremely difficult propositions before you, my dear friends, but the least that we need to do is to say, how do we help the profession meet this? Otherwise, you will have a disastrous situation where the cream de la cream of audits move between the large accounting firms, and you will be left neither with the baby or the bathtub. What we perceive as an opportunity, in reality doesn't exist. because only the B minus and C category and D category audits are going to come to you. This is what is going to happen if the profession does not rise to this challenge. Sahib, you spoke, you introduced me, and I thought that most of it was something that I didn't deserve. But I have one comment to make on that. Even assuming for a moment that I deserved, I thought I will share with you one thing. It is quite possible that those 30 years of experience have enriched me to such an extent that I'm a great guy. But honestly, when I'm standing on this stage in presence of you all, does it really matter? It matters only if I'm able to share those experiences, share what sort of threats and opportunities that exist post 2013 Companies Act. Will it make any sense? And with that, I deal with some of the key provisions of this. Okay? Now, there aren't too many slides. I will see to it that I deal with lesser number of issues, but some of the very, very critical issues we will go through. It is not possible. We do not have the time to go through everything. But you can rest assured, we will deal with some of the important ones. I promise you, I will restrict myself only to removing this. We are now going to focus on 6 main themes. 6. New provisions for auditor appointment. What are those? You don't need to take down notes. You will. I'm sure that you will be given a soft copy of this. So please don't take down any notes. You don't need to. The next important aspect that I spoke to you about is with regard to auditor rotation. What are these rotation rules? How does it impact us? And so on. Third is very, very critical. That says you cannot perform non-audit services. Now, earlier also those provisions existed in some way or the other. But now these are very materially different. We will deal with them. The fourth is the rigor on audit reporting. It is not a shade audit report where you just say we have received all the information, explanations and blah, 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 signed, sealed, delivered. No, it is going to be much more challenging than what it was in the past. 5, this is very important. Class action suits. What is the risk that you stand if something, God forbid, goes wrong? What are the implications from a fraud perspective? What are the implications from a gross negligence perspective? I will give you a very simple example. If there is gross negligence, unfortunately, today you have people who will say this is abatement and charge you with criminal conspiracy. And that can put you into one hell of a lot of trouble. Therefore, it makes no difference whether you committed something which was grossly negligent or whether you actually perpetrated or joined hands, colluded with the management to perpetrate a fraud. It really doesn't make a difference, in my view. So these are the last. Of course, the NFRA has been constituted to have the powers of a civil court. That is something that we will discuss. I'm sorry about the font size. The font size is extremely small and you will need special viewing powers to have a look at it. I think probably the objective was to see to it that you don't understand a damn about what is written on that. But I assure you, my dear friends, my integrity is not all that bad. Okay, now I will try to help you with what is there on the screen because I have something slightly proximate as compared to what you people can see on the screen. The first simple thing is that the appointment is for a period of 5 years. Having said that, every year there needs to be a reconsideration by the AGM. It's not that once you get the appointment and you tell people, go and fly kite, my dear friends, for the next 5 years, see ya. No, you cannot do that. So that is one aspect about the appointment. Now, in the case of individual firms, after 5 years, you're out. But in the case of partnership firms, you have an advantage. What is that? You have 10 years. So you have 2 5-year terms. Now, with regard to the number of audits, Kanubai said there is a complexity. And there is a complexity. There is an element of vagueness. We have very distinguished members of the profession. For example, PR Ramesh, I'm sure a guy like PR would be able to throw light on what does the 20 mean? What is 20? 20, did 20 mean 20 or 90, 18? PR, we will need your help. And I will tell you what the problem is. Let us assume that you form a partnership comprising of 10 partners. And because of the fact that we have distinguished people like Kanubai who say, sorry, I'm going to be an advisory guy, you guys take care of the audit, so we count him out. So that makes it 9. There are 3 more people who are into tax, so that makes it 6. The question that arises is it 6 multiplied by 20? That is my limit 120 audits? Or is it, sorry, it is per partner, yeah? It is per partner. Therefore, it is 10 multiplied by 20. There is some complexity in this, and unfortunately, it is chaotic. I will come to that particular clause a bit later. You also have the concept of joint audit, and then the law provides that, ideally speaking, in the case of very large companies, you have a staggering basis, which means that you appoint and you ask one of the joint auditors to leave in a particular year, and then afterwards move another guy out, so that you don't have both the joint auditors getting out at one single time. So this is nothing great about it. Now, there are some issues with regard to extended disqualification and independence criteria. I will list down some of this. For example, if any one of your relatives were to hold securities in that particular company, in that audit client, you would be disqualified. Now, it is very easy to say, relatives, koi baat nahi yaar, we'll ask these relatives to give it up. But if you see the definition as per the rules of relative, other than the illegitimate child of an unknown father, all other permutation combinations are covered. So hypothetically, let us assume that you are asked to make a proposal. You go to a client, you go to a prospective client and say, I should be considered for audit. And they say, please come and make a presentation, and you make the presentation. They say, wonderful, now we have decided to award this audit to you. And you go and tell them, look guys, I have a small problem. What is that? You know, I have this problem of this. One of our guys, relatives holding this, shares worth some 50 lakhs, and that guy is saying, refusing. He's saying, no, I'm not going to give it up. What the hell were you doing all this while? You wasted our time. So you will have a situation where if you are not geared, you will make a fool of yourself. You will cause great embarrassment to the firm and land up and cause embarrassment to the company where you went and made a pitch. Now, these sort of clauses apply right through the tenure of your appointment as auditors. It is not that at the time of appointment only. Right through, you should be independent on this criteria. Similarly, you should not be, you and your relatives both, should not be having debts, owings to these people for more than 5 lakhs. Somebody asks a question, is it per relative 5 lakhs? Suppose if there are 20 relatives and each person has 5 lakhs each, 1 crore, can we get away with it? Now, unfortunately, there is no clarity to that extent under the rules and so on, but I would be inclined to believe 5 lakhs is 5 lakhs. You cannot stretch your luck and say, sorry, it is 5 lakhs multiplied by, fortunately I got about 75 relatives. and that makes it about 3.5 crores. So you cannot do that, which means that 5 lakhs means 5 lakhs, you are over. Now, we come to an extremely important aspect, and that is auditors, subsidiary, associate, any other form of entity of auditor involved in any prohibited services. Now, this has serious import, and that is, if you have an associate firm that renders non-audit services that are prohibited, you are no longer eligible to hold office as an auditor. You cannot. Now you will say, what exactly is meant by this? We don't understand because we don't have any non-audit services in our firm. Sorry, what happens is that there are many firms, mainly large accounting firms that have so structured themselves that they have these network of firms, and while it is possible, I am not telling you with conviction, sorry, I don't have data. It is quite possible that one firm does a statutory audit and somebody does some internal audit, or somebody does a management audit or an operational audit, that could possibly fall under the realm of prohibited services. So this not only deals with what non-audit services you render, but also other firms in your network. So this is to ensure that you don't have the cake and eat it too. So this is what it is. I spoke to you about the indebtedness and the guarantees which are similar to this in terms of understanding. I spoke to you about this cooling off period, and I spoke to you about what happens when you complete one term of 5 years. You get appointed. At that time, you are considered for a further period of 5 years. Whatever I spoke to you about eligibility criteria applies right through, which means that at any point of time you are not eligible, you step down and you will not be reappointed. It is left to the company to decide whether to appoint you as an auditor or not. Now, it applies to whom? I spoke to you about an opportunity that exists. I spoke to you listed companies, unlisted companies, private companies, and all sorts of companies for which this will be required. This will need to come out. So the implications are, as far as India is concerned, India has never undergone through such a level of audit rotation. It has never happened. It has only been, as I mentioned to you, banks and insurance companies and the government companies. So now this applies to every conceivable entity. If you see the transition period that is allowed to you, you are allowed a transition period of 3 years. Now, to give you a very simple example, if you already have been an auditor of a company as on date for 10 years and above, you still get a period of 3 years, which means at least 13 years you can continue as an auditor. If I have been an auditor for 14 years, today I get 14 plus 370. But there is an unfortunate problem, and that is, if I have been as on date an auditor for 7 years, they will say, sorry guys, you're going to get another 3 years only because you complete 10 years on 31st March 2016 or 17, whatever that date is. So that is the way it proceeds. If it is 8, then you get only 2 more years. 8, 3. That makes it 11 years, and so on. So this is how the entire progression takes place. Now you can argue that, what happened was that this is an interpretation, please. Let me make it very clear. If you are a network firm, you cannot say that firm A in the network was 7 years. Now we are holding it only for 3 years, which means that we can go on for another 7 years. You cannot do that. Which means that all network firms together, put together, will be taken into consideration for this limit of 10 years plus 3 years. You cannot say, no, these are independent firms and I will take the limit per firm. That is not allowed. Now, there is a problem with regard to all these non-audit and prohibited services. nobody knows exactly what do these mean. For example, if you were to ask what exactly is meant by management services, there is no precise definition available, and therefore it is quite possible that you will say, sorry, this is not in the nature of management services, my dear friend. There was no management, there was no control, there was no supervision. But the law could hold the view that these represent management services, and you could get into a sort of a trouble. Therefore, from a practice management perspective, always tread on the path of law. What do you need to do? Clearly have a sort of a job arrangement letter made out. See to it that your understanding is documented exactly, that this is exactly what we will do, so that there is no ambiguity. So tomorrow, hypothetically, someone were to ask you, what exactly did you guys do? Sorry, here it is. This is the job arrangement letter that we signed off with the client. So with regard to all these aspects, there are some which are, clearly no. Like for example, internal audit. But you can say, I never did an internal audit. Actually what I did was a managerial audit, where we advise management on governance and all that rubbish. If you ask me, right from the beginning, try to find out whether it passes the smell test or not. Otherwise, you are going to have serious problems later on, because you will be asked to quit. So this is what the law is as far as non-audit and prohibited services is concerned. As far as the transition is concerned, hypothetically you are rendering non-audit services that are not non-prohibited, but these are non-audit services. What is it that you do? Get out by 31st March 2015. So which means that you are given 1 year's time. At the end of 2015, get out. So you cannot say, sorry, it has been going on, my dear friends, this project is for the next 5 years. No, you cannot continue endlessly. You will have to quit that job on 31st March 2015. This is what the law is. You cannot go on endlessly doing that non-audit services. I will come to the issue of the audit report. I have simplified this and put it into some 5-6 categories, and I will explain to you some of the. There is no clarity on item number 1, I'll be honest with you guys. Observations on financial transaction matters with adverse effect on the functioning of the company. What exactly do they mean by adverse effect is really not known. But this is one on which the auditor is required to comment. Similarly, if there is a qualification or an adverse remark on the maintenance of accounts, the auditor is required to comment. Now, these two are at least understandable, but the third one is a complex area. It says adequacy of internal financial controls and effectiveness. I spoke to you about this. What exactly is meant by this? Now I'll give you a typical example. During the beginning of the year, the controls were not adequate. So you went and met with management and they said, we will have this put immediately. And they started working on it. And within 4 months after the commencement of the year, after you were appointed, they saw to it that internal controls are adequate. Now, from a regulatory perspective, is that enough? No, that's not enough. Internal controls should have been in force and should have been adequate right throughout the year. Which means that, let us assume that you are the statutory auditors of the company and somebody else happened to be the internal auditors. You will need to go and ask them, hey guys, can you tell us what sort of people you employed on this job? We would like to understand. We would like to know whether you put partners or you put junior level chaps to get this audit done. Otherwise, you are going to explain at the end of the year the test of adequacy. That onus is on you. Earlier, we were never so blatant enough to ask the internal auditors, I would like to understand what people you put on the job. I would like to understand how much of time they spent. What is it that they did? I would like to see your documentation. Can you show us, please? All these were questions that we used to say, okay, fine, let us have a small questionnaire, have a nice meeting with these internal auditors and ask them, hey, did you all do a good job? And they say, yes, of course, here is the report, take this. And we said, it appears to be fine, thank you very much. Now that is not enough, because you are going to have a serious problem, because this has an important, significant reporting implication. So this is what I am trying to tell you. One of the most difficult aspects about this whole thing is with regard to materiality threshold for fraud. This is one hell of an area, and I would like to spend about 5 to 7 minutes. Do we have about 15 minutes? Okay. So I spoke to you about fraud and how you are required to deal with it. The law of, thank God, I would say, thank God for those small mercies. The law says if there is any fraud perpetrated against the company and the auditor gets to know about it, he has got to first inform the audit committee. The audit committee will have some 45 days time to report back to you, and they will say, we are through with it, we have checked everything and everything is fine, thank you very much. Now, you have 15 days time to submit a report to the central government. Now, the stupid part about the whole thing is, let us assume that you are perfectly satisfied with the action that the audit committee has taken. The law doesn't say it, fine, in that case don't report. The law says you report, which means whether the action taken is adequate, not adequate, great, the entire matter has been fully resolved, that thief has been caught, put behind bars, and that guy is finished. That's not enough. You still have to submit a report to the central government. There are serious complexities, and we will need to deal with this. Typically, and this happens especially in the case of, I have seen SEC registrants, that is, typically companies like, Wipro and Infosys and all these clients, they have a very strong and robust whistleblower policy and system. Therefore, what would happen typically is that somebody will blow the whistle, he'll say, something is going wrong, All these, entries were passed at the last minute, these blighters have inflated sales, and blah, 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 blah. Now, when did this happen? This happened 24 hours before the quarter results are going to be announced and you're going to sign. 24 hours before that. The audit committee comes and tells you that, look guys, we have a problem because there has been a whistleblower and this is what it is. What are you going to do? I know you guys, you're a bunch of frauds. I am going to have this reported now, I am going to start my investigation. What happens to the timelines? What is the call that the auditor is going to take? Is he going to say that there is a fraud? If yes, on what basis? Fortunately, there is a particular term that has been used, and that is only if the auditor is fairly, believes that, there's a particular word that is there, and that is a saving grace, and it says that only if the auditor believes that there is a prima facie case of a fraud against the company will he say, okay, fine, ask the audit committee to look into it. But suppose if there is lack of discretion, or suppose if the auditor panics and says, sorry, I want you guys to do this, otherwise I'm going to hold up the entire accounts, the whole thing could go into a complete, spin. So this is one area where it is extremely important to know what exactly is the nature of the fraud. Most of the times it is very difficult for anybody to conclude at short notice that this actually is a fraud because it takes time. What does the auditor do in the interregnum? Does he wait? Or he says, sorry, I'm not going to wait. 45 days are over, boss. Now I'm going to report. What happens in that case? So these are areas where we need significant clarity. So fraud is one aspect. Now the most difficult aspect of this reporting, now I am not talking about other frauds that we talk normally under CARO. For example, if there are other frauds, For example, if there is a fraud perpetrated by management, that doesn't come within the provisions of this. It doesn't come under the reporting. If you see the act, Kanubai, it talks about fraud perpetrated against the company, that comes under the purview of this. So if there are other types of fraud, does that mean that the auditor does not report? Of course the auditor takes that into consideration. It is business as usual. He has got to see how to deal with fraud, just as he was dealing with in the 1956 Act. But this one is complicated and different because there is no concept of materiality. Even if there is a 50 rupee fraud, the auditor is required to take it up, because unfortunately there is no concept of materiality. So you have a set of fraud where materiality does not apply. So the question that arises is, with regard to frauds perpetrated by management, do you apply materiality there? So you have a completely stupid, dichotomous, and what sort of circumstances where the same type of, we are talking about fraud. One set of fraud you report, the other set of frauds you don't report. One set of frauds you say materiality applies, because that is business as usual under the 56 Act. Whereas these frauds where the fraud has been perpetrated against the management, you say, sorry, no materiality. This is going to make the auditor look like a fool. And the earlier there is a clarification on this issue, the better. I spoke to you about this internal financial controls with regard to financial statements. The complexity arises on account of the fact that financial statements could mean individual financial statements. They could mean consolidated financial statements. Or what about these quarterly accounts that you sign off? No, why? Limited review. Suppose if there is an internal control issue, do you take that also into consideration? Prima facie, if you ask me, with my knowledge of English, I hold the view that it applies in all these cases. So it is not only a sort of a pure statutory year-end audit, it applies in any case. It has got to be taken into consideration. So that is one aspect on this. What is the requirement? Board's assurance on internal financial controls to cover financial statements. It has also got to cover ensuring orderly and efficient conduct of the business. So is there a formal definition? What exactly do they mean? If you ask me, there is no formal definition of what they are talking about, but internal financial control means basically policies, procedures for ensuring orderly conduct and so on. So this, unfortunately, is a situation where the coverage is extensive and it deals also with operating controls, which means that you will have a set of controls where the management talks about internal controls with regard to even strategic controls in their board report. And here we are talking about the statutory auditor talking about financial controls. So you again have a dichotomy between what is required to be done in the board report and what is required to be done in the auditor's report. So again, I believe that this is an area where there needs to be clarity from the Ministry of Company Affairs, and they need to say this is exactly what we meant by that. Another issue that could arise is, are you talking about operating controls? Are you talking about operating effectiveness? What exactly is meant by operating effectiveness? Say, for example, we are talking about a budget. Every company should have budgetary controls. So now the company is, you ask them, what sort of budgets did you guys prepare? We prepared these budgets. Now, were these challenged, and did you ensure that these budgets are right? We challenged, but these guys never gave us a response, and we had problems, finalizing these budgets. So you tell them, thank you very much, my dear friend, I am going to have this reported as an internal financial control failure. They will get a shock of their lives, because this is not a typical area where you comment as an auditor. But under these circumstances, you could hold the view that even non-finalization of a budget or significant delays in the finalization of a budget also would get covered under this. So you have a significant stretch and significant new issues coming within the entire ambit of internal financial controls. So when we talk about operating effectiveness of controls, it is not so simple to say operating effectiveness means simply, is it operating effectively? No. You have got to look at controls from an operations perspective, and this is what is going to create a very serious problem. A friend of mine was telling me that under extreme circumstances, let us assume that we have a case where Honda has recalled some 40,000 cars. Would you cover this in your internal audit? Operational controls are weak. So, although this talks about financial controls, if you see the board report and the requirements as far as the board is concerned, it talks also about strategic controls. So, you have a situation where we are not talking merely about financial controls as such. If there are financial controls that impact the operating effectiveness of the company, you are going to have a problem, and that also is going to be covered within the ambit of these provisions. So this is one area. Similarly, I mentioned to you about internal controls of a subsidiary company. Are you required to report as the signatory to the holding company accounts? Are you required to ask every subsidiary company account that you are not signing, please sign off on internal controls. I want you to confirm that the internal controls are adequate. So what do you do about this? So given the fact that you have very little time at your disposal, you will have serious challenges signing off on adequacy of internal controls. I spoke to you about this, about unlawful and wrongful acts, and under what circumstances can an audit firm have a problem. One of the things that I thought I will share with you is this. Let us assume that it is established that one of the partners of the firm, there were 10 partners, Kanubai, and one of the partners on that engagement was the guy who signed off, and it is established that he has perpetrated a fraud. My question to you is, do we say that the firm is disqualified from continuing with the audit? Or can you say, my dear friend, this guy committed the fraud here, we'll throw him out of the firm. Chalo, let us get another partner and continue with the audit. So this is one aspect that we need to have a clear understanding, because although the liability dwells on the partner who perpetrated the fraud, the question that arises is, from a firm perspective, can the firm hold the view that it concerns only one partner? Throw that guy out, get another guy in, chalo, it is business as usual. So when do you come to a conclusion that this is what it is? If you ask me, my honest interpretation is the firm gets disqualified. You cannot say, chalo, ye chala gaya, get another guy, yaar. That guy also commits the fraud. Koi baat nahi hai, sahab. We have got another seven partners. So I do not believe that, because that would be a complete travesty and it will be a mockery of the provisions that exist. But I would be happy to be enlightened as far as this particular aspect is concerned. Just to say that the National Financial Reporting Authority, which will start its work, is also endowed with the quality of the engagement and look into all these aspects, in addition to the fact that they are required to investigate, into misconduct and so on. And if they commence investigation, of course, it says that nobody else commences and they complete it and so on. I'm not sure if I have covered everything, but I do hope that some aspects which are critical from an auditor perspective in terms of appointment and in terms of eligibility I have covered. Can I just, Kanuba, if I can just have a look whether I have missed out anything. Provision under section 143(1)(f). There is a proviso which is extremely important. It says, provided that the auditor of a company which is a holding company shall also have the right of access to the record of all its subsidiaries insofar as it relates to consolidation of its financial statements with that of its subsidiaries. Which means that the holding company auditor cannot say, arey yaar, what do I do here? I never got it. I asked them for it. They never gave it to me. Similarly, the management cannot say, you are not signing the accounts of the subsidiary. Somebody else is handling it. You don't need to ask for it. We will not give it to you. Sorry, they cannot do that. Therefore, the auditor is empowered. He has the right to ask for that information and he will get it. Now, the flip side to it is, the auditor cannot say, I asked for it and I didn't get it. Earlier, he could take possibly the view that somebody else has done an audit and he doesn't have to worry about it. But today, if he asks for it and he doesn't get it, there is a reporting obligation, which I thought is extremely important, and I thought I should bring it to your kind attention. I am sure that given the time, I mean about a couple of hours more, we would be able to cover something more to it. But in the constraint of constraint of time, I believe that I should say thank you. I will end this only with a particular incident that happened and I am aware of, and I thought that I will share it with you, my dear friends. And that is, there was this professor who went on and on and on in the class, and people said, "Ye kab khatam hoga yaar? This guy is going endlessly." And what happened was that one of the lady students sitting in the front row got extremely infuriated, like you. And what she did was, she, just very discreetly looked at the time. And the professor got extremely annoyed and he said, "Young lady, it is extremely impertinent and bad manners on your part to look at the time when I am talking." And the lady responded by saying, "Sir, I wasn't looking at the time, I was looking at the date." So before you guys look at the date, let me say thank you.
Sir, thank you. Thank you for the excellent presentation. I believe the institute is coming out with the guidance in due course on the subject of the fraud. And that's what they have been coming. And though BCA would make a presentation, but ICA has already got a lot of information together. And as I understand from the Central Council members, that the application will come very strong. But I individually believe that given the technology area, the old theory of watchdog still continues to apply, and it's not that we are the now. So coming to your other issue on the 9th Amendment by your yourself that we need to go. I remember the word given earlier by the audit committee that we would have 50 people to start a particular audit. I say that it is not that the swapping of the firm is going to happen, swapping of the audit is going to happen with different firm, because the audit committee board, as rightly said by you, would look at the experience and the caliber and the knowledge and the team member. I am consciously aware that in fact the clients are coming to the office and having interviews in the teams also when the larger audit appointments take place. First I am taking that privilege. Because I remember distinctly when Mr. Ramesh said last time that on the subject of the indebtedness, if I have a relative abroad, what am I going to do? Am I going to write to the company that please find out, because I have no relation with the relative as defined in the Act? Would you tell me that whether he is holding any shares in the company, or would you tell me about his indebtedness? Nevertheless, these kind of problems are teething issues which we should be able to commit up over a period of time. Sir, thank you once again. And we have about 10 minutes for about 5 to 6 questions. So, friends, yeah, please.
Nataraj, you mentioned on fraud. Well, the verdict here said that if it is from an outside on the firm, on the company, even if it is perpetrated by the management, and one would look management as different from whatever management does through related party transactions, if it is adversely affecting the company, would it be able to cover in that the company is affected either by way of outsider doing it or by management themselves, but the company itself is getting adversely affected. So maybe even the internal fraud may get covered.
Sir, as I mentioned to you, I am going by an extremely narrow and strict interpretation, and I will tell you why I am doing that. Otherwise, every fraud that happens, either way, you have a problem. And I will give you an example. There is a bid that the company does. A bid. For example, you make a bid for supply of medicines to the government. And they ask the company, are these prices the same that you quoted for somebody else? And you say yes, and that's a lie. That would be a serious, what we call it, fraud. That is the way I would put it. But I don't know whether that would come under this category or not. And that's the reason why I said, as I mentioned to you, I have been interpreting rather than saying, because it leads to financial result. As I told you, how can it happen that one set of frauds get picked up and the other set of frauds only because it doesn't satisfy that criteria of company perpetrating on somebody else doesn't get covered. So there is an issue on that, and I fully appreciate what you said. Yeah.
National fraud. But Sahara is not connecting the train. Nothing is there. Only their bills are passed. Absolutely useless. Hopeless. All these jobs are not uploaded unless we have that practice. What has gone in Sahara? All this money is taken the poor people. You can see they will not get anything. They have run away with it. They don't have business. Nothing is there. We should prepare a nice scheme for investigation because it is going to help. It is going to affect our profession. I am ready to deliberate with you anything you want regarding this people. They should ask to do it here.
Appreciate, sir. Appreciate. No, there is only one point that he's making, and unfortunately, I have shameful that all of us, including firms that are large firms, get embroiled into these sort of issues and controversies and situations one time or the other. And I will give you an answer, sir, to this, and that is a human answer, and it has got very little to do with money in life, and I'll be very honest with you. Sir, in the case of very large companies where auditors do an audit, it's so I'm not justifying, okay? Please, I must first make it clear to you, I accept whatever you say. Yes, sir. I'm not justifying, but what happens is that the firm may be atal. They will say, nothing doing, we will not yield to any pressure. But if the team yields to pressure, if that one partner who is signing yields to pressure and they tell him, boss, you bloody jolly well sign, okay? We don't want any problems for you, and we don't want any problems for your family, and we don't want any problems for us. We want you to just quietly sign and finish it off. And don't get into all these stupid debates of calling your senior partner and all that. Sign this bloody thing off and get lost. If that guy comes under pressure and signs off, you're finished. I'm not trying to tell you that he was right. That is why in the case of audit, it has got very little to do with technical ability. An auditor, when he comes under pressure, should first consult his partners. For example, if I have a partner like Anuba, I'll tell him, I have a problem on hand. This guy is putting pressure on me. What do I do? He says that I will throw you out as auditors, and I will have no portfolio left. I will have no work. So what he says, Nataraj, you don't worry about it. Even if there is no work, the firm will support you by giving you the work that other partners handle. You don't worry about it. We will go and tell him, get lost. Now, if that consultation does not happen, I guarantee you, you can have all your internal controls and all your audit methodology. you would sign off something where you will regret for the rest of your life. That is all that I got to tell you.
Thank you.
Yes, sir. Thank you. Haji sir.
Sir, I have two questions. You may decide to answer one of them. The first is about the account you are given for the responsibility from the auditors and extra things that they have to do, including reporting to the central government. What about the fees implications? Can you give some comment? That's number one. Second question. You said 5 years into 2, that means 10 years. I'm not counting 3 years. After that, is there a room to come back into the company?
Yes, you are going to wait for 5 years.
Okay, so that's what.
So what you do is that, I will give you a specific answer. I have got two answers to that. What you do is that you say, no, I'm not going to not wait for 5 years. Yeah, that audit, I cannot let it go. It's a very important audit for me. So what do? You form a partnership firm by asking your guys to form another partnership firm. If anyone from your firm joins that firm, that entire firm gets disqualified in terms of accepting their engagement for another 5 years. So just because you got it transferred to some other guy and formed another proxy firm, B firm, and then another C firm, you are not going to get away. So the law is very clear on that. You cannot structure things in such a way. Similarly, I have got some 10 firms. What I will do, I will transfer it from A to B, B to C, C to D. For the next 75 years, I will be auditors. You cannot. So transfer from one networking firm to another firm, not allowed. Transfer from one firm to another firm where one of your partners goes and joins and then does that work also, not allowed. Why did I give you the example of these medium-sized firms that are going to face very difficult times? Their partners cannot join any other organization. See, for example, there is X Limited. They say, you want to continue with the audit, you do one thing. We cannot continue with you as auditors because you have completed some 50 years. We will do one thing, we will transfer it to him. We will give the audit to him, but you be the signing partner in that firm. We will be very happy. You cannot do that. Because the moment I go into that firm, that entire firm gets disqualified from accepting that engagement for 5 years. So what are you trying to achieve? Nothing. No. Very clear.
The fees aspect, the question.
Sir, I will tell you one thing. There was many years ago, I recall the institute had come out with some guidance note on fees. After that, they never came up with it. I personally believe that many of the engagements that we all accept, all of us accept, are below the cash cost. Many times, clients say, "Arey yaar, you are going to charge so many thousands of rupees per hour." They do not realize that it required enormous amount of training time. It required, there is a risk when I sign off. That cannot be, I cannot wear a tag on my back, $25. I cannot do that. On this, I can, there is a tag. But on my service, there is no tag. So nobody understands, unfortunately, the price one has got to pay for the risk. What happens, if something goes wrong and I'm put behind bars? What happens if I accept liability, which is, such that it wipes out my entire wealth? Who is going to take responsibility for that? So unfortunately, world over, believe me, in the world, what does the regulatory authority say? You cannot accept any non-audit engagement. Why do you think auditors accept non-audit engagement? You are not going to make any money on audit. At least let us make some money on non-audit. They say, sorry, you cannot because your independence is impaired. So either way you lose. But not only in India, the world over, there is no such thing. Except that in the US, when the SEC carries out a review of your files, they find that you are recovering just about, say, 20% or 40% on an engagement, they will question your independence. They will say your independence is now questionable because you are doing it at virtually below cost. So they ask you that question. But unfortunately in India, there is no bloody concept. The regulatory authorities, the government doesn't understand that it requires enormous amount of investments and risk to do an audit. This is what the law is. This is what the reality is. Yeah.
So, I just want to ask one thing, sir. What is the role of internal auditors in this
If you ask me, Ramesh, are the internal auditors also on the same category as the statutory auditors when it comes to liability? No, they aren't. You see, there is one difference. You can proceed against the statutory auditor, whereas the internal auditor can say, sorry guys, I did this. Now, that puts them in a better situation. At the most, they lose their job. Okay, there is no legal criminal liability unless somebody, some third party files a case against them. In the case of a consultant or a key managerial personnel or auditor, third parties can file case against you. But in the case of an internal auditor, to the best of my understanding, and memory, I don't think that you can do that. So they are much better placed. At the most, they will lose their job for the next year.
So last question.
Yes, sir. Yes, of course. Absolutely not. It is not a prohibited service. In fact, I will put it the other way around. If you accept a tax audit where you are not the statutory auditor, your risk actually goes up. God forbid that guy has signed off something and it comes to you and the tax audit, you rely on that chap and you sign something, your risk is 100 times more. Therefore, you have actually got to tell the government, what are you guys talking? You are talking exactly the opposite. I should be the statutory auditor, otherwise how will I ensure that proper tax returns are prepared? So it is the other way around. That is an assurance I give you.
But what last, is there any other prohibited service?
Sir, that any other prohibited service can mean even going and flying kite. But I will be honest with you, it doesn't involve a tax audit. That is an omnibus clause. It covers every conceivable thing in the world, but it has got to be read in harmony, similar to those sort of services. Valuation services and all that possibly would come under prohibited services, but otherwise I would hold the view that this would not. This would not. Otherwise, you see, tax audit is a very distinct, specific service. They would have covered it if they wanted you not to do it. I am 100% certain. In fact, I would say that you should be ideally the statutory auditor so that you can do a proper tax audit.
Maybe under the tax law, but the tax audit is also under the statute, Income Tax Act.
Sir, is it that
You're right.
CAG audits and CAG audits and bank audits also, the allotments are always linked to the statutory auditor also doing the tax audit. In fact, an attempt was made by the
Exactly.
bank to delink the tax audit, which at a behest of the institute, rightly so, was removed by the
Removed, yes.
Wait on that, sir.
Ultimately, sir, what do you think? All these provisions are going to increase the quality of audit. Where are we going to? Is it going to be beneficial for the society? Is it going to be better public accounting? What's your view?
Sir, this is my view. Everybody said US GAAP, IFRS far superior to Indian GAAP. Where do the maximum frauds happen? In Europe and US, not in India. No. I'll tell you. I'll come to that. I will come to that. I am extremely tempted to say I agree with you, but I will tell you one thing. I have worked for an extremely small firm, and when I used to compete or when I used to sit on a table with larger accounting firms, I used to say, damn it, I am much better than what you are, my dear friend. And this is the view that I genuinely hold. And I'm telling you, this comes from the bottom of my heart, that small firms in this country do as good an audit. The only thing that I mentioned to you, there are certain skills that they need to develop. What is it? Information technology related controls. They need to understand the technology. Just imagine if you go to a high technology company like TCS or Infosys, you will not get any trail. So that is one thing that you have got to learn. Similarly, second thing is forensic. How many of us are exposed to forensic in our entire career? We don't know what forensic is. Do you know what forensic tools are? We don't have exposure to that. That is where the profession has got to develop in India, so that by employing those tools and analytical data, analytics, you are able to ascertain patterns of wrong behavior. or deviation and then say, hey, yahan kuch gadbad lag raha hai yaar. So that is one thing that we have got to learn. Otherwise, I personally believe, you take the case of banks. Yes, there was one major mishap in that bank scam and all that happened. Otherwise, if you see, it is the medium-sized and small firms that do bank audits, and they have been doing a great job. If you see the CNAG, they have not been able to punch holes in the audit done by small accounting firms. So I would say that integrity is fairly high, and I'll be very honest with you.
These provisions are going to increase the quality of audit?
I would hold the view that it is a strong deterrence. I would hold the view that it is a strong deterrent, and it would increase. Gap by itself is not enough. This is what my
expected audit fees is likely to go up, go down. What's going to happen after rotation?
If you ask me, honestly, there is no correlation. That is the unfortunate part. There is no correlation, and that is where the risk lies. Because what would happen is, when these audits come up for tender, they will say, we were paying a fees of 75 lakhs to these big chaps. Are you prepared to do it for 50 lakhs? We were paying much higher fees. Now you do it for 50 lakhs. Another guy will say, I will do it for 40 lakhs. So what will happen is that we will compete against each other and bleed ourselves as a profession. This has been the experience in other advanced countries. Forget, developing countries. In advanced countries, this has been the experience. And we are heading towards, I pray to God we don't, but we are likely to head towards that scenario. Thank you, sir.
Sir, so you agree that whenever I am in competition with the BSR, I always say that people are same, people knowledge is same. So you appoint me and not the BSR. Sir, in the lighter way. Sir, so nice of you to be here. May I request Manish to say well-deserved vote of thanks.
Like Mr. Natarajan, but before that, I just want to reply to that question that as long as we have leaders like Arvind Bhai, Ramesh Bhai and Mr. Nataraj in the profession, the quality of audit has to go up. Friends, before I propose a vote of thanks, I want to specially thank you on behalf of our president. I was constantly in touch with him in WhatsApp. He's out of the country and he's been continuously asking me about this meeting, and I told him the feedbacks, and he's told me personally on behalf of him, please thank Mr. Natarajan. So first, thank from him. Friends, Mr. Nataraj has been extremely so busy in his profession that when I spoke to him, when I welcomed him today, I asked him that how was your trip and how did you come from? He took 5 minutes to think last night from which place of the country he's come from. He's so busy. And friends, thank you, sir, for sharing your personal experiences. And on behalf of the BCA and everyone present over here, I request all of you all to propose a very hearty and deserved vote of thanks to Mr. Thank you, sir.